Hi there, this is a Year 2 Microeconomics topic video focusing on price discrimination by businesses. And in this short video, we're just going to look at some of the arguments which justify the use of price discrimination. In other words, some of the economic and potentially some of the social benefits. So what are some of the arguments in favour of price discrimination? Another phrase for it, by the way, is price targeting. This is when a business decides to try and segment the market and charge different prices to different groups of consumers for what is essentially the same good or service, not to do with the cost of production. Well, here's one argument. There's an argument which says that businesses can use price discrimination to cross-subsidise. So in other words, they might charge a high price to one group of consumers and generate the producer surplus, the profit in that segment of the market, and then be able to offer a deep discount, a much lower price to another group of consumers for the same good or service. So, for example, it may be the case that drugs companies, big pharmaceutical multinational companies, can make their profits in developed advanced countries and perhaps cut prices dramatically in lower middle income nations. So cross-subsidy is a possibility there. Second argument, of course, is that price discrimination is a way of making better use of spare capacity. Oftentimes, businesses have slack periods, off-peak times, and actually making better use of spare capacity can bring environmental benefits. So, for example, discounted tickets on the trains off-peak times makes better use of the existing rail infrastructure and perhaps leads to less waste of scarce resources. A third argument is really quite important, I think, and that is that especially when you have third-degree discrimination, where you're targeting different groups of consumers, the low price for a good or service can bring new consumers into the market who might actually have been excluded because of affordability had they faced just the normal monopolistic profit maximising price. So it may bring some new consumers into the market, particularly if the supplier is willing and able to charge them less. Examples might include legal and medical services where charges are dependent perhaps on individual income levels. One of the good examples of good deals comes from Robert Frank's hurdle model of price discrimination. This is where consumers can benefit from a significantly cheaper price, especially if they're prepared to overcome a hurdle put in place by the suppliers. So are they happy to use nearly new products as opposed to perfectly new? Are they prepared to collect some coupons ahead of purchase? Are they prepared just to wait for a paperback instead of getting the hardback? Or buy a once-used game? Are they prepared to risk not getting the product by going to a standby booth for a ticket? And are they prepared to go to the time and hassle of going, for example, to a store on the day to pick up a special deal? So in many cases, the hurdle model suggests that consumers who are just prepared just to tolerate a little bit of inconvenience, a little bit of a hassle factor, can get a really good deal, and the price is closer to the marginal cost of supply. And the fourth argument, of course, is that price discrimination is designed to generate higher revenues, ultimately. It's designed to increase the profitability of businesses. Now, producer surplus has value. So the key evaluation point is the extent to which those extra revenues and profits are used for productive purposes. One of the justifications for monopoly, of course, is that businesses can make profits, but they can be used for productive reasons, for example, to fund research and development, and perhaps innovation, for example, in pharmaceutical products, or greener fuels, or renewable energy, which brings not just dynamic efficiency to the market, but which can also bring some social gains as well. So there we go. Here are sort of 4 arguments that you can possibly use in evaluation in support of dynamic pricing by businesses, otherwise known as price targeting. There'll be a separate topic video on the case against price discrimination. Just check out our YouTube channel for that.